Hey guys, welcome back to the channel. I hope everyone is doing well. So sorry if this video is gonna be kind of negative, but I just want to warn people. So I just want to thank Charles over here. There used to be many covered call ETFs back in the day in the 2000s. They all went to the wayside. This is just the next generation of covered call ETFs. That being said, FEPI I do think is one of the better ones out there to hold long term. I employ an option strategy to hedge it each month. That has been working out very well. I think this new ETF is what many customers are wanting, growth AI centric fund. So this is in response to my AIPI video, but I thought this comment was very, well, how should I say this? Like I thought this was very fitting for this video, and this is very timely because I'm also glad that there are also other savvy investors out there, and this person is definitely experienced. I can tell, just because this person has been around, since like the early 2000s. And I did actually recall that, back in the day, cover call ETFs, they had like some trouble. Well, obviously, back in 2000. Early 2000, 2001, there was the dot-com crash, so that's why a lot of these ETFs died. And I was actually trying to do some research on this, but I couldn't find any old links or old articles, unfortunately. So I was trying to find like something that I could document, but I did recall this, and I thought like, well, since I can't prove it directly, the best I can do is kind of just like use this as kind of like a reference. And then there was also a recent video that Tom Sosnoff did from the Tasty Live Network. He mentioned this as well. So I'm glad like, there are, more experienced investors out there besides myself that have recollections of this. So first, just want to say nothing lasts forever, and I hope we can dodge the eventual pain. I have seen some like more negativity in terms of in the comment section, not just in my own, that there are some people that are losing money on yield max and defines funds. First one, I just want to say I'm sorry to hear that. I hope that you can find like a suitable alternative to park your money, because we are in a very, I would say, generally speaking, a good market. Even with the recent pullback in certain areas, I still think 2024 should be very good. But after that, I I have no idea. First, if you're sitting on some profit, like take some, especially if you have seven figure or above. You're doing very well, but you can't expect that to last forever. I expect the wages of sin will be garnished. Bubbles eventually lead to a river of tears. And every so often, there's a generation scarring financial event. For myself personally, I would say the last one was probably the 2008 2009 financial crisis. Even though, like, during the financial crisis, it was horrible, uh, there was a little bit of good news in that, like, the cost basis of some of my stocks were so low that and there was so much opportunity out there. Like I was able to grab some, even though I was like, scared out of my mind, just for my own job and my portfolio, etc. But eventually, there was like a nice recovery after that. So I'm thinking after whatever the bad thing happens in the future, like let's say like there was like some another banking crisis or like a black swan or like a war or whatever. Uh, that's going to cause a lot of pain initially, but then after that, people will eventually come to their senses, and then there'll be like a nice recovery after that. But leading up to that point is going to be kind of volatile. So I think we're probably in the beginning stages of a financial farce, maybe a triple bubble potentially. So one, I think you're already starting to see like the AI names, like it's getting kind of ridiculous out there. Although the good thing is that there are some useful products that are going to come out of this. The second thing I would say will be like the crypto space. I still think we're still in the early early stages of a crypto bull market. We're already starting to see like a lot of these meme coins starting to come back. I'm personally gonna stay away just because like there's a lot of hot money, and if you buy at the wrong time, you're gonna get burned. And then the third bubble, I think, will probably be like all these high yield products that are starting to come out. I think Yield Max and Defiance were smart in that they got in early, but we're already starting to see some of the negative effects, and that's some of the funds, not all of the funds, are experiencing problems. Part of it is due to like they're selling premium in a declining volatility environment. And right now, in the maybe in the near term, there's going to be an oversupply of short volatility products. We've already seen like the new ones from Roundhill. We've already seen the new BlackRock ETFs in addition to TLTW. And I hope this should sound familiar because back in around I want to say 2018, 2019, we had like the Volmageddon. So at some point, there's gonna be like some market shock, and like the VIX is gonna double or more, and then a lot of these like short volatility products, namely like covered calls or cash secured puts, uh, people are gonna be in a world of hurt. Unfortunately, volatility spikes are painful, and I just want to reiterate, if you want to read up more about like Volmageddon 1.0, there's still online articles because it's still relatively recent, so they're still online. So if you want to refresh yourself, I strongly recommend rereading those news articles. My guess is that a lot of these option-based ETFs will get ripped apart, unfortunately. I'm hoping like YieldMax will release like the inverse ETF soon, so just so we can kind of start preparing a little bit. And again, I just want to reiterate, do you think these ludicrous valuations are going to last forever? Just in my experience, no. I think things are bubbly, but there's still room for like the bubble to kind of like grow a little bit more. And I'm hoping that'll last like maybe till like the end of the year, and then like towards 2025, that's when like bad stuff might start happening. But there's still like some time. The crypto bull hasn't officially started yet. And also like another good reference to kind of like refresh people's memories. There was a really good book called When Genius Failed by Roger Lowenstein. This talks about like the long-term capital management failure. And one thing to note is that like on long-term capital management, like on the board, they actually had Robert Merton and Myron Scholes that on board. And if those names sound familiar, it's because these were two out of the three creators of the Black-Scholes option pricing model. So go figure. Like the people that created like the option pricing model, like they couldn't get it right. But I'll let you read that book or reread it. And I think like right now, what's causing, well, I guess like what's causing some additional problems is that there's a lot of like these fake guru YouTubers. I think they're just trying to make a name for themselves, and they're indirectly marketing some of these funds, but it's bad in that it causes like a lot of like hot money to come in, and what I call like the high yield tourist money. But they're not gonna stay around forever. They're probably like me. They're trying to take advantage of like the, I guess, like the temporary high yields, and unfortunately that causes some issues. A lot of these folks aren't doing the analysis. Even like spreadsheet clowns like myself, this, like I have to recognize like this money isn't gonna last forever. So again, so why is Panda here? Well, I just want to grab whatever I can while they last, and then eventually like start heading towards the exit. And then if they survive, then I'll probably buy back in, because I think right now, I think there might have been like a mini bubble that burst, and that's why like we're starting to see like some people getting hurt. Some people have already exited. Again, I'm really sorry if you lost money on these things. Hopefully you can find like another area to park your money and kind of recover it. And again, I just want to say like risk doesn't magically disappear. I grabbed some of these slides from like a prior video. Like just think about it this for a second. Do you think any investment bank, like a market making firm or quant fund, wants to take retail risk? Of course not. They could have, find a way to like dump it on someone else, like the first chance that they get. So like just as an example, again from like the I Spy, in order to kind of stimulate like their short call strategy, they're using a what I think is a total return swap. But of course, Goldman Sachs doesn't want to take like this type of risk, so they're gonna have to hedge it out somehow. So they're probably gonna in turn short SPX calls. They're gonna short ES futures, or they might short like liquid stocks. Because remember, they have to take the other side. So if we're short calls, they have to be long calls, and so of course they're not gonna want that risk. So, and what's funny is that Goldman Sachs, they might be indirectly hedging themselves with these ETFs. I can't prove this, of course, like because they're a large organization, and they have a lot of moving parts. But in a way, GPIX and GPIQ. First, I think it's kind of smart for them to kind of get in on some of this ETF action as well, and they won't do this out of the kindness of their hearts. They want to make money, and this is just my theory. Of course, so don't take it too seriously. Another thing that I think high yield investors should be aware of. There's something called ETF Death Watch. This was a pretty good resource that I thought, like back in the day, like around like after 2008 2009. This was kind of like a guilty pleasure of mine just to kind of see like which ETFs were gonna die. But I think this could be like a really good a resource again. So I linked the most current iteration in the comment section below. So of course, feel free to check it out. Uh, my guess is that in the future, unfortunately, some of the defines and Yieldmax ETFs might wind up on this list as well. In addition to Curve Invest, Neos, etc., Global X, what have you. But hopefully we'll have some time to kind of enjoy the yields while they last. So again, I want people to kind of check and go over your portfolio. Make sure you don't have a lot of like short volatility exposure, because when something breaks, you might not have time to exit in an orderly fashion. You might not get the price that you want, and then also like make sure you're not concentrated in any one sector. Unfortunately, I think the careless retail investor will get hurt again. So please pay attention to your cost basis. Expense ratios will matter again. So like the higher expense ratio ETFs, I think those will be kind of like the first to go. And of course, like have like a stop order handy just in case. I think it would be a good idea to sit near the exits. So I guess like there's still some pros. I think there's still, I mean, relatively speaking, like the high yield ETF option based funds, I think they still offer like a pretty good, compelling yield at least for now, and that's why I think we should try to enjoy it while it lasts. But of course, there's going to be risks. So as I mentioned before, the expense ratios are kind of high, and we don't have any control over the option strike selection, unfortunately, and we're of course we're seeing like the implied volatility levels collapsing, and that's why like I think some people are getting hurt. The yields definitely won't be consistent, but month to month. And again, please don't be like the last bag holder. If you like this type of content, please consider giving this a like. If you can subscribe, I want to try to keep the channel alive at least until like the high yield ETFs like blow up. This way, we can kind of like most of us will try to enjoy like the yield while it's around, and then hopefully we can all get out together at the same time. So thank you for watching. I hope people make some good money out there, and I'll see you in the next one. Bye now.